Hey traders, welcome to Charts and Coffee, our non-farm payroll edition. We just rolled out of the Sector Secrets Mastery where we use the hourly price movement ranges to set up positions with the volatility of NFP. Not the data, not what we thought was going to happen, what the price action did right with the data, trying to capitalize on that volatility. And just to give you all a quick glimpse at what this was and how we do it, some of you are probably already familiar. Where are my drawing tools here? There they are. Okay, so some of you are already probably familiar with these. So right before the NFP, we take a read on where these levels are. Now, this is not what they look like at the moment before NFP. This is what we were looking to do. Buy the ES on a limit buy at 42, 45.20, 15, and 09. So we sunk into this range. We would buy the ES. We went down to 45.23. So my HPMRs were just a bit more conservative. There we go. Just a bit more conservative than unfortunately, than the lows that we had. But directionally, everything was spot on. Everyone who attended the webinar on Wednesday, you're probably already starting to see the sequence. All you need are the tools, right? At this point, in just 54, what was it, 45, 54 minutes, whatever we were doing in the webinar, I can't remember. We talked about the sequence. That is a repeatable sequence. And at this point, if you watch that webinar, you know exactly what I did, right? All you need are the tools to do it, right? So you need the HPMR on your screen. You need the multi-trend on your screen. You need the propulsion. You need the grab candles. But once you've got those four things, at this point, probably at a glance, most of you said, oh, Rag, of course. You're looking to buy. That was a zone, and this is why. That was it. That was it. So again, even when I fall shy, and like I said, 3 points shy, even though I fell shy of the trigger, it did what I needed it to do. We are trading above key levels. And by the way, I am at this point fairly certain that all the folks that have been telling us that we're circling the drains, you know, now if you turn television on, oh my gosh, we're heading lower and inverted yield curves and what other apocalyptic things are going to happen, I don't know. But I'm sure now, after steady rallies through the middle of August, everyone's a bull. That's not that simple. It's really not that simple, is it? So we're going to talk a lot about where are we now, and is it really just up and away from here, or is it just a preamble to a more significant move lower? Remember, gang, none of us tell the future. None of us know what's happening around the corner. What we can do is look at the structure of the market. So if you haven't checked it out already, there's two ways that I'm going to do it. One, and I don't know where I'm getting this rogue. I'm going to get a haircut. All right, that's what I need to do. So I'm going to look at this range here. That's where we are, gang. That's the reality of where we are. We are in this range. But is it bullish? Absolutely. It is absolutely bullish. No doubt. No doubt is it bullish right now in terms of just the overall year and really where we are now since bottom. Let me show you something, gang. There's a line in the sand here that maybe some of you do or don't know. So through here, gang, this is a bullish multi-trend. We buy only. We don't pick tops unless you hate your money, gang. When you see a green multi-trend, I'm sure a lot of you have this now because you got the class, or some of you have this because you're in my mastery. Either way, you know what to do with this. Don't short. Don't step out in front of the freight train. Just buy when we get into the zone. It's no different with the HPMRs, right? But as soon as we made this transition here, we've gone from an uptrend to no trend, right? This is an uptrend. This is no trend. Okay, so in a no trend market, well, it's fair game to be a short seller or a buyer. You know, it's going to depend on which end of the range we're on. But right here, and if you want to know where that inflection point came, okay, Rog, when did we start getting bullish? This is going to go right back to the tools that you're going to get as part of the class. That pattern right there, and that little signal right there, with that, this is an oversold stochastic. It's an oversold slow stochastic. That's it. That's it. And when we get movement like that, when we get that move to the upside, now we can start to shift to looking at the daily price movement ranges, or what I think is going to be even more productive because it's going to offer us more opportunities in our trading pipeline, is just shorten it up to a 5-minute time frame like we did this morning for non-farm, like we'll do again this morning after the bell, and say, look, I don't know that the market thinks we're out of harm's way. Jobs data was poor, both in JOLTS and in today's NFP. So that was definitely something that is going to grab the attention of investors and traders, but it's also going to likely grab the attention of the Federal Reserve. Are we going to anticipate a lower chance of another hike this year? When we jump into the master, we'll talk about the macroeconomic impact, because on a day like today, we're going to see the needle move, right? It's not something I need to look at multiple times a day or even daily, but when we have certain key metrics that are released, I can go back and look at that target rate probability. We will do that after the bell today. So as always, let's go ahead and take some questions. If you have any, feel free to type them in. And let's see. First up, Christian, how are you, my friend? I wanted to ask about the HPMR. Looks good to catch the normal volatility of the stock. Can you talk about what it is or how it is calculated, why it's so good? So Christian, did you check out the webinar on Wednesday? I would say that's going to give you a number of examples, the sequence that I'm talking about. I went into a deep, deep dive of the value that I have found over the decade that I've been using this calculation called the hourly price movement range. So is it good to catch normal volatility? Well, it measures the low end of volatility, the average, to your point, normal, and the high. So I'm getting a spectrum of levels that account for lower than normal volatility versus on the higher end of a 68% probability. That's what it's designed to do. What does the market do 2/3 of the time? That's what the HPMR does. Right? So what is it? It's a volatility based tool, and you see it just plots all day long based on hour by hour by hour volatility, right? And Christian, we're going to have another webinar next week, I think on Wednesday. We're going to have another webinar, I believe, on Wednesday. And so if you want to see some more examples, you want to see me walk you through it, yeah. So just as we're always looking for, think about what most traders put on their charts. Trend lines, kind of subjective. Chart patterns, very subjective. Support and resistance, now we're talking. I like support and resistance. I use a Darvis inspired process for it. And you can see that in the yellow and the purple lines, which by the way is included in the class with the signals, by the way. And then I use support and resistance based on those green and red zones, and that's the HPMR. It's calculated by looking at 6 months of historical volatility, right? So why is it so good? This is the way I look at it. And Christian, these are all my opinion, of course, but the opinion's backed up by thousands of trades using this thing. So the reason it's so good is twofold. One, most traders are only looking at price from the perspective of open, high, low, close. They're looking at price levels, open, high, low, close, right? When they're looking at a price chart, very rare is the trader who's looking at the time of day or the day of the month, right? That's a time factor. Very few traders are looking at price-based volume, how much volume occurred at a specific price. And nobody is looking at historical volatility because up until the HPMRs, it really didn't exist, especially intraday. So you might have banks that look at value at risk, right? That's been around forever. But it was never really translated into a trading tool. And that's what the HPMRs do. And then the edge comes from, look, if you can see something that someone else cannot, if you can see that there is support and resistance waiting on a day like non-farm payroll at a certain level and someone else cannot, that level is just open space to them, there's your edge. That's why it's so good. So that's my 2 cents. Thanks for the question, Christian. I appreciate that from our YouTube. All right, very cool. All right, so let's go through a little bit more of what's happening right now, because one of the things that I've been really just railing against is making sure traders are not waking up every morning with this overly pessimistic attitude and opinion about the equity markets. Again, every now and then when you need to when you need to check yourself. Well, I used to work on a dive boat. That's something that I did through college. I had a dive boat business. And that's actually one of the things that fortunately introduced me to the first professional trader that I'd ever met. He used to rent the whole boat out on Wednesday. So I'd skip class to basically spend the entire afternoon taking this guy for a dive. My captain and I would go take him for a dive off the coast of Fort Lauderdale. So anyway, he was a bond trader. And some of you might have heard the story. He had this big Quotron, this big machine with the big, I'm like, that's a really weird Walkman. Now I'm dating myself, right? It was a Quotron machine. Anyway, one of the things that for me, I think when I find myself looking at the different edges of the market, if we're looking at the different opportunities in the market, if we're looking at an overall trend, yes, we can look at it with price. We can look at it with volume, but step back and look at the forest for the trees, as they say. Gang, what of this view? You're looking at the view of the NASDAQ for the year. What of this view tells us we're circling the drain? Yes, so please don't get caught up in the fear mongering of because this and this and this, we're going to tank. How many times have we heard that all year long? How many traders have not put capital to work to the long side because someone keeps telling them, oh no, this is just a setup to send the markets lower. Really? Right? And that's what frustrates me because the year has been really good. We built a position portfolio in the Sector Secrets Mastery. We actually did this the last time everyone was fear mongering, which was September, October. Right? So for those of you in the mastery, when do we build the bulk of our long positions using our weekly long-term perspective? Back in September, October. That was the last time the world was supposed to be ending, right? So it gives you an idea that, look, gang, the game, people always ask me, is the game rigged? And I say, yeah, it's rigged to the upside. So, this shirt that I'm wearing says, keep calm and buy the dip for a reason. But we've got to find which trends are heading higher. And when you're not certain about the bigger picture, shorten the time frame. That's really it. You say, Rag, I'm not really sure. I hear what you're saying and I see the chart, but I keep hearing about all these reasons that we should be lower. Great. It probably would be nice to then shorten the time frame and try to take advantage of these kinds of moves higher. Does this make sense, gang? And I'm looking for some questions. So either everyone's exhausted from an awesome summer and ready for the fall trading season, as am I, or I'm putting you all to sleep today. I'm not sure. All right, here we go. Hey there, Dave. Thank you. Do I use a master watch list, or do I use a scanner? I'm a watch list fan. So if I'm going to do, and I think I closed my watch list. One of the things that I have, and I closed it out, is on a 5-minute time frame. On a 5-minute time frame, one of the things that, oh gosh, where is this? I've got a toss watch list. And you know what? I'll show it to y'all on the next webinar. That's a great question. And I have a fixed number of names, indices, and sectors that I look at. So I don't, Dave, great question. I don't want to use a scanner. I don't want to wake up every morning and look at stocks that I've maybe never looked at before or haven't looked at in years or months and say, okay, today I'm going to trade you because that stock met some sort of technical criteria. I'm not a fan of a scanner in that sense. What I am a fan of, Dave, is looking at index, sector, stock. That's what I've been teaching for years. What is the Russell, the Dow, the NASDAQ, the S&P doing? What are they doing? What are the sectors weighted within the Russell, the Dow, the NASDAQ, and the S&P? What are they doing? And what are the stocks weighted in the sectors? So once you get that sort of hierarchy, think of it as a pyramid, if you will. Once you get that hierarchy, you're looking at similar names day in and day out, and not because it's ineffective, but because we know the highest probability follow through is going to come from the impact, the influence, the overwhelming influence of high concentration weighting. So I'm a big believer of more of a fixed group, and that group isn't random. It's based on that high content. And in that way, what's really cool is that you get to know these stocks, you get to know their nature, you get to know their earnings, you get to know their trends. And it's like walking into the office with a group of friends you already know, rather than, oh my gosh, I don't even know what this company does and what's the volume and is the option chain liquid. None of that. You don't have to refamiliarize yourself all the time. I like my watch list like a comfortable shoe, right? I know it inside out. What sectors are shared between the ES and YM? Gypsy, the most important is financials, XLF. The second most important is XLV, healthcare. All right, MRI Rock asks, what are the yellow and purple lines used for? Support and resistance. You'll see I have the same type of indicators working on my intraday time frame as I do my end of day time frame. I've got the Darvis 3.0, which is the automated support and resistance with these little signals, right? And this is a process that we modernized for today's markets, but was originally created by Nicholas Darvis back in the 50s. Back in the 50s. I love old school indicators, gang. I love them. I love stuff that's around and relevant and relies on psychology. So Nicholas Darvis was a 52-week breakout trader. That was his jam. Some of you might know his story. If not, it's a cool story about how he was paid in Canadian railway stock. He was a dancer. He was a dancer, and he was paid in Canadian railway stock, and he was really ticked off. He put the stock in a drawer and left it alone. Sometime later, he takes the stock out to see what this is worth, right? And he says, oh my gosh, I made money. That was it. He was hooked. He was going to figure this stock market thing out. So he was a dancer from Hungary. Came to the US, and like I said, the rest is history. We know him now as a legendary trader. So ultimately, what he did is he realized there's a psychology to movement. And one of the basic tenets of what he did was a 52-week breakout. But he would look for a specific type of pattern that would precede these breakouts. So he was a momentum trader. Fast forward, now he was doing all this in the 50s. Fast forward 30 some odd years in the late 80s, and I discovered Nicholas Darvis's work while in high school. Now remember, back in the 80s, we didn't have the internet. We didn't have bookstores everywhere. If y'all remember, it was Walden Books in the mall, right? So you didn't have access to all this trading knowledge and education. So I used to go to the library, and the only thing they're going to have in the library is old copies of magazines and old books, which is why the work of Wyckoff, Dow, Darvis were the only things I had access to. So they influenced my young brain back then, and I never let it go because it still works today. We just had to modernize the process, automate the process, right? Even Darvis, who didn't have computers, what did he do? He automated a process. He had a systematic way of saying, this is support, this is resistance, and the rest is history. All right, Google. What's the next target for Google? Well, we're going to go back to support and resistance, Ben. If I look at my tools, there's two ways that I can do this. And I think, Ben, not knowing what time frame you're looking at, time frame will matter. I like 1 hour and daily time frames. So time frames will matter. But if I'm looking at the next target for Google, I'm going to use my volatility tool, my PMR, and that's up at 140. All right, 140. All right, awesome. Okay. Are these indicators, hey there, Randy, are these indicators on Thinkorswim? Yes, these are on Thinkorswim, but I support two platforms. I personally use two platforms. One is, I'm actually starting TradingView right now, so you can see it. One is Thinkorswim, TOS, and the other is TradingView. So my indicators work on TradingView, and they work on Thinkorswim. They look a little different, but they do the exact same thing. The graphical interface between the two can be a little different, but they look almost identical in terms of the way that they are visually represented, and they do the same thing. I've got my propulsion dots, I've got my multi-trend, I've got my HPMRs, I've got my DPMRs, all the things we talked about. So yeah, those are two platforms that I use. But yeah, right now I'm on TOS, but we also use TradingView. Yeah. Hey there, Peter. The DPMR and HPMR plus Darvis has made a universe of difference to my trading. Thank you, Peter. Awesome. I love hearing stories like that. Anyone out there who said, Rob, yeah, these indicators have made a big difference. I love hearing it. I share it. I share that oftentimes with struggling traders because a lot of times people need to see, oh, you're not the only one that it's working for, Rob. Other traders are seeing the patterns and the sequences are working for them too. You've been doing this for 30 years, Rog. Of course this is working for you. So a lot of times you never know, Peter, who you're going to inspire, right? So if any of this stuff has made a difference for you, help you turn the corner, feel free to shoot me an email at success@sectorsecrets.com. Success@sectorsecrets.com. Let me know. You never know who you're going to inspire. Did Darvis make the Darvis 2.0? No, iPod. Darvis had his own box approach. We modernized it. It's not really even Darvis any longer. For all intents and purposes, it's not really even Darvis any longer. Because, again, what Darvis did was very different than what I do, but I used a lot of the processes. I remember that I stand atop the shoulder of giants, and I like to pay homage to those traders that influenced me as a young trader. So I could have called it anything. Some folks will joke and call it Rarvis. I like to call it Darvis 2.0, an upgrade of his brilliant work. All right, gang, I just realized I am flat out of time. As always, thank you so much for being a part of Charts and Coffee. Check out the replay from Wednesday's webinar at simplertrading.com/consistent-replay. I will be with you on Sunday preparing finally for the fall trading season. I guess that's my birthday present. The fall trading season starts really next week. Volume's coming back, attention's coming back. Hopefully some great follow through as well. I'll see you Sunday at 6 p.m. for the Top Tier Outlook Live. And the next week, I'll see you for webinar number 2 before we roll on into our big class for the fall on September 9. Be good to each other, gang. I'll talk with you soon.